Hi, my name's Natalie. I head up partnerships and commercial for Platinum Property Partners. I'm joined today by Kelly Wall from Vibe Finance. The key reason is that we get around 3,000 people a year inquire with us to find out about what we do at Platinum, how we help people, and why invest. The key question is why invest into HMOs. The main reason is that it's quite a simple reason, really. They're 3, 4, sometimes 5 times more lucrative than a standard buy-to-let property. We get the same questions actually on the calls that we receive at head office. So I've got 5 or 10 questions in a quick fire round with you, Kelly, just to hopefully help people that are listening in. So Kelly, what are your thoughts about HMOs as an asset class? Does that ring true with you, with your investors?
Yes, absolutely. I mean, here at Vibe Finance, we do a range of buy-to-let and commercial finance. And I have to say, HMOs are the most popular, although they do come with a little bit more work because you've got more tenants to look after, more rooms to manage. But ultimately, the return can be so much more greater. And a lot of our investors do just want to make a passive income, and they can do that with HMOs, which is why it's probably one of the most popular strategies we find.
Fantastic. So I've got my list here of questions, Kelly.
No pressure.
No pressure. So we'll get through these as quickly as we can, but these are the most frequently asked questions that we get at head office. So what is a HMO mortgage?
So an HMO mortgage, I guess is exactly that. It's a product that is designed specifically for a house of multiple occupation. And that can be tenants from working professionals to DSS tenants to students, depending again on what the investor strategy is. Unfortunately, you can't just go onto a standard buy-to-let product. So an HMO product will be slightly more expensive. However, at the moment, they are actually really competitive, even post-corona. Different lenders will value the HMOs slightly differently. You'll have some lenders that may be a little bit more cheaper that will only value it as a bricks and mortar property. You get other lenders that will actually value it as a commercial going concern based on the yield. Typically, that's around 5, 6 beds plus. But the good news with that is if the value is coming in higher on a commercial yield basis, you can actually secure more from a capital raising point of view, which can then obviously free up your cash and go and buy other properties. So
fantastic. So this is a question that is coming up a lot, certainly due to the economic climate and coronavirus. What if somebody's been made redundant, and we're a number of people that are inquiring at the moment that are facing redundancy or wanting to change careers, but looking at our business model, and that they're in very different changing landscapes at the moment work-wise. So what if you've got somebody that's wanting to get a HMO mortgage and they may have just recently been made redundant?
Yeah, this is a hot topic and really unprecedented time, isn't it? But luckily, there are quite a few lenders on our panel that don't have a minimum income requirement.
Okay.
Although they do require some form of income. So I would hope that in this situation, the clients will already have some form of property income they're drawing down off that they can prove by way of an SA 302. Failing that, if this is going to be their first one, I'm sure we can come up with an explanation that we can apply to those lenders as an exception in those situations. But yeah, please don't worry, because we will still have options in that scenario.
So case by case, but you're creative in the way that you package your clients to the lenders.
Absolutely. And a lot of our lenders as well, they are very personable, especially at the moment. So it's a case of picking up the phone, speaking to the underwriters directly and just building a story. Explain what the situation is, what the clients are currently doing. Are they interviewing for new roles? Are they perhaps in one already, but on a little bit of a probationary period? And usually off the back of that, we'll then get bespoke terms agreed.
Okay, that's fantastic.
If not, there are options.
Still worth looking then, that's great.
Absolutely.
What is happening in the market, in the financing world and mortgage world at the moment, coming out of Corona and obviously coming out of the situation? We've seen quite a lot of things change, a lot of restrictions, but now is there a little bit more flexibility again? It's
starting to get that way, yeah. So it has been quite stringent over the last couple of months coming out of lockdown. but things are starting to relax. And I find it has a bit of a knock-on effect with the lenders. So as soon as one kind of reduces their rates slightly, the domino effect then passes down the others. We've got one lender now at 80% loan to value, but not on HMOs.
Okay.
On single let properties. So good news is, if they're doing that on a single let property, it's only a matter of time before someone comes out with an HMO 80% mortgage product again, which is great. So it just shows that things are getting back into the old swing of things. We've never been busier.
No.
We are so busy quoting new inquiries, especially for bridging. People are seeing lots of good opportunities to houses to be converted into HMOs, seeing a lot of that. I just hope that people don't become too nervous to actually go through with it, which I don't think they will. And I think as long as people are still buying and are still committing to that, then that will keep the economy going.
Absolutely. We're seeing the same our end as well, more inquiries and more interest. And, you know, there is a bit of at the moment, a bit of pent up demand since March and April. But obviously with the stamp duty changes as well, that's really given the market a bit of a shake up and getting people out there because they're savings that are worth having. So it's a great time. So another question for you. What if I live overseas? What if I'm based in the UK but live overseas and want to build a portfolio and some income in the UK?
Okay, yep. So again, we have a number of lenders that will consider expats. Typically, expats have their own product range. So likely, again, that this might be a little bit more expensive than a standard HMO mortgage. But again, some don't. So swings and roundabouts. If you are overseas and based in the EEA, it's a little bit easier. If you're overseas, based in the EEA and already have buy-to-let property here, again, easier. But we have options if you're not in the EEA and don't have property here. Typically, to keep the rate as favourable as possible, if you still have a credit footprint here in the UK, still have a UK bank account, then we can still get you favourable terms. Otherwise, you are looking perhaps with a rate that may start with a 5, possibly a 6.
Right, okay.
But again, there are options. So yeah, there are possibilities depending on whereabouts you are in the world, but expats are definitely being considered at the moment.
Fantastic, that's great. So can you talk me through, with a property, you've got a house, what do you do? So when you've bought a property and you want to make it into a HMO, I know I'm right in saying you can't just put a HMO mortgage on it. So could you talk me through the cycle from buying to then actually making it a fully functional and fully tenanted HMO?
Yeah, and do you know what? This is a really good point, Natalie, because we get a lot of clients as well, as do you, that call us and say, well, I had a broker before who said I can just go on to a buy-to-let mortgage, ERC free, early repayment charge free, for those who don't know the jargon, and I can build it as an HMO and then refinance it to get my cash out. Well, yes, you can, but actually you would be in breach of your terms and conditions with that actual lender because they wouldn't consent to that on day one. So as a broker, I'd never recommend you doing that. That's why we'd always recommend bridging finance. Yes, it's a little bit more expensive, but that lender knows exactly your intentions for that property. Whether you require planning permission or whether you're covered on permitted development, they are aware that you're going to be refurbishing that property to an HMO and they consent to that. Once that bridge is then, once your works are complete, we can then look to refinance you onto an HMO mortgage and everything's done. You don't then have to worry about the risk involved of a lender knocking on your door and potentially calling your loan in. With bridging finance as well, there are options out there. So typically, likes of Castle Trust and other bridging lenders, you've got quite a favourable rate, around about 0.67% per calendar month. You fund the cost of works yourself. We've got other options whereby rates are a little bit more expensive, around the 0.75% per calendar month mark, but they'll actually fund 100% of the cost of works for you.
Oh, wow.
So that just frees up that extra cash for you to keep in your bank account so you can then go on and buy other properties, not tying it up in this project, which again just can become a lot more lucrative, again, depending on what your strategy is. So I keep saying there are options, but there are so many different options. And that's what I like to think that I can offer with my clients, is that we'll sit down, we'll have a conversation over the phone or by Zoom, whatever the case may be. And depending on what's important to them is how I would then find you a solution, if you like.
Fantastic. So I think, let me just check my list to see if I got everything here. Redundancy, overseas. Do you have to be a homeowner already to get a HMO mortgage, or are there options?
Again, there are options. They may be a bit more expensive, but we have got lenders out there. We've got lenders out there as well that will consider first-time HMO landlords, which for platinum property partners can quite often be the case. So we've got a number of lenders out there that can consider that, but ideally they would like you to be a homeowner. But if you're not, again, your rate just might be a little bit more north of what you're used to, but we can discuss it and I can see what options are out there for you.
Fantastic. I know the answer to this one because it's a way that we structure our partners' businesses through a limited company. But can you borrow through an SPV or a limited company?
Yes, yes. And to be honest, the majority of clients nowadays do that because of the tax saving benefits that you have. Typically, SPVs are more widely accepted, but we have got lenders that will consider a trading business on a limited company. Again, they're a little bit more expensive, but the option is there. However, typically clients, if that's the situation, they may just open a brand new SPV for this particular purchase. But yeah, that is becoming more of the norm now, whereas perhaps rewind 5-10 years ago, that was considered quite specialist.
Yeah.
Whereas now, because of the tax savings, it seems to be everyday occurrence.
Absolutely. So it wouldn't be an interview about Platinum if I didn't do a small plug about Platinum. So the benefits of being a franchise partner when liaising with lenders, I mean, is that something that you see of benefit, the fact that they're following a tried and tested and proven business model with, you know, a franchise that's developed over £500 million worth of HMOs across 110 different towns and cities in the UK, having that background and track record, does that help when you're approaching lenders for the best deal for your clients?
100%. Majority of lenders on my panel as well have heard of Platinum Property Partners and are knocking at my door because they want to work with me, knowing that we're working with you, which is brilliant. What a great brand to have out there. And the reason why they like it is because they know the quality of franchise partners that you've got on your books. And the reason they've got the quality is because of all the support that you guys give them, from anything from the legal side, from the planning side, the whole strength of an investment journey. You've got it covered, and that just gives lenders a lot of reassurance, especially during these unprecedented times. You can still have an investor who's got 20 years worth of experience, brilliant, but no one's actually experienced being an investor in coronavirus before, and having more people helping drive the right business plan forward during this weird and bizarre time, the better. And that's exactly what PPP are offering. So yeah, lenders are absolutely lapping that up. So I will definitely be, any deal that we get from PPP, I'll be sending it over to lenders with a full proposal that's exactly what they've got in the background.
Fantastic. So Kelly, thanks ever so much for your time. There are top questions. Anyone that's watching this has found some of those points of use, and you can walk away with some key points that may help you with your own property investment journey.